There is a credit card that most people do not even know exists. Not because it is hard to find, but because the people who have it do not talk about it, and the banks that issue it do not advertise it. You will never see a commercial for it. You will never get a mailer offering you one. You will never find an application form on a website. The only way to get it is to be invited. And the people being invited are not just wealthy. They are a specific category of wealthy that most of us will never personally encounter. We are talking about people with assets in the tens of millions, people whose annual spending alone exceeds what most Americans earn in a decade, people for whom the word budget is simply not part of their financial vocabulary. And these people have a credit card that works completely differently from anything in your wallet right now. No preset spending limit, no points cap, dedicated 24-hour concierge who can arrange almost anything anywhere in the world on a phone call, and benefits so exclusive that most of them are never listed publicly because they are negotiated individually for each cardholder. Today, I am going to pull back the curtain on exactly what these cards are, who has them, what they actually offer, and what the existence of these cards tells us about how money and access actually work in America. And then I'm going to show you something even more interesting. What the smart move actually is for the rest of us, because the strategies that make these cards valuable for billionaires have a version that works at every income level, and most people are leaving serious money on the table by not understanding it. Stay with me. Section 1. The card that started it all. Let us start with the one that created the mythology, the American Express Centurion card, known simply as the Black Card. Amex launched it in 1999, not because of market research, not because of a focus group, because rumors were already circulating that a Black American Express card existed for ultra-high net worth clients, and enough people were trying to get one that the company decided to actually make it real. Think about that for a second. A product was created because the rumor of it was so compelling that demand existed before the product did. The Centurion is not applied for. It is offered to existing Platinum Card members who meet undisclosed spending thresholds. The general consensus among people who track these things is that you need to spend somewhere between $250,000 and $500,000 per year on your existing Amex card to receive an invitation. The initiation fee is $10,000. The annual fee is $5,000 every year after that. And people pay it enthusiastically because what they receive in return is not a list of perks. It is a different relationship with money and access entirely. Centurion cardholders get a personal relationship manager, not a call center, not an automated system, a specific person assigned to their account who knows their preferences, their travel patterns, their lifestyle. They get access to airport lounges globally, including private terminal access at select airports where the experience looks nothing like anything a standard traveler would recognize. They get hotel and resort benefits that are not available to the public or even to other premium cardholders, room upgrades, complimentary nights, access to sold-out properties. And they get a concierge service that can reportedly arrange tickets to events that are technically sold out, restaurant reservations at places with 12-month waiting lists, and travel arrangements for private aircraft when commercial options do not suit the timeline.
Now, here's the question I want you to sit with. Is that worth $5,000 a year? For someone spending $500,000 annually on a card with elevated rewards rates, the answer is almost certainly yes. The math on points alone can offset the fee multiple times over. But here's where it gets more interesting. Section 2. What these cards actually do differently. The Black Card gets all the attention, but the more fascinating story is what separates elite credit products from standard ones at a fundamental level. Because it is not just about perks, it's about how risk is calculated. When you apply for a standard credit card, the bank runs a model. Income, credit score, debt-to-income ratio, payment history. The model spits out a credit limit and an interest rate, and that's what you get. No negotiation, no relationship, just an algorithm's output. For ultra-high net worth clients, this model does not apply. The bank is not worried about whether a client with $40 million in assets is going to miss a payment. The credit risk is effectively zero. What the bank is actually trying to do is win the business relationship and potentially the wealth management, the private banking, the estate planning, the investment accounts that can come with it. The card for these clients is not a product, it is a loss leader.
It's the thing the bank offers at cost or below cost to establish a relationship that they hope to monetize through other services worth far more. This is why the benefits are so extraordinary. The bank is not making money off the Centurion card directly. They're making money off the relationship it creates. And this reveals something important about how the financial system actually works at different levels of wealth. For most people, banks extract money. Interest charges, overdraft fees, monthly maintenance fees, foreign transaction fees. Every product is designed with fee structures that pull money from the customer toward the bank. For wealthy clients, banks spend money. They compete for the relationship. They offer services below cost. They assign personal bankers who exist to serve, not to sell. The system literally runs in reverse depending on how much money you have. Section 3. The other cards that most people do not know exist. The Centurion gets the headlines, but there are other cards operating in this same space that are even more exclusive because they are genuinely invitation only and genuinely not advertised at all. The JP Morgan Reserve card, formerly known as the Palladium card, is made of actual palladium and gold. It is offered exclusively to clients of JP Morgan Private Bank, which requires a minimum of around $10 million in investable assets to even begin a relationship with. The card itself has a relatively modest annual fee of $595, but the barrier to access is one of the highest of any credit product in existence. If you are not already a JP Morgan Private Bank client, the card simply does not exist for you. Then there is the Coutts World Silk card in the United Kingdom, Coutts being the bank that has served the British royal family for over 300 years. To be a Coutts client, you need a minimum of £1 million in assets with the bank, or an annual income of around £300,000. In the United Arab Emirates, there are cards issued through institutions like First Abu Dhabi Bank, targeting the ultra-high net worth clientele of the Gulf region, with benefits that include private jet access and concierge services that operate at a level that sounds fictional to most people. And across all of these products, the common thread is the same. The card is not the product, the relationship is the product. The card is just the most visible, most everyday symbol of a financial relationship that exists at a completely different level than what most people experience. Section 4. What this actually tells us about money.
Now, I want to get to the part of this conversation that I think actually matters. Because talking about cards that require $10 million to access is interesting, but it is not useful unless we extract the principle underneath it. And the principle is this: wealthy people do not pay for access. Access comes to them. Wealthy people do not wait for the bank to decide what they qualify for. The bank comes to them with offers. Wealthy people do not pay retail on financial products. They negotiate, they leverage relationships, and they receive terms that are simply not available to people who walk in through the front door. This is the real secret of the black card, not the concierge, not the airport lounge, not the palladium construction. The secret is that at a certain level of assets and income, the entire financial system reorients itself toward you. And here is the question that should make you think. At what level does that reorientation start to happen? And what can someone who is not a billionaire do to access even a fraction of that dynamic? Because the answer is not $10 million. Section 5. The strategy that works for the rest of us. Let me be specific, because this is where the video actually becomes useful for your life. The principle behind elite credit products is leverage. You are using your financial relationship to extract maximum value from the institution, rather than the other way around. You can do this at every income level, and most people are not doing it. Here is what the credit card optimization strategy actually looks like for someone who is not a Centurion card holder. Step 1. Understand your spending patterns before you choose a card. Most people choose a credit card based on the sign-up bonus or the marketing. That is backwards. The right credit card for you depends entirely on where your money actually goes each month. If you spend heavily on travel, a travel rewards card with no foreign transaction fees and strong airline or hotel partnerships is worth significantly more than a flat cash back card. If you spend heavily on groceries and gas, a card that gives elevated rewards on those specific categories outperforms a travel card for your lifestyle. The first move is to categorize 3 months of spending and then match a card to your actual behavior, not your aspirational behavior. Step 2. Never pay a fee for a card that does not return more in value than the fee costs. This sounds obvious. Most people do not actually calculate it.
A card with a $550 annual fee is worth paying if and only if the benefits you actually use, not the benefits that exist on paper, exceed $550 in real value to you. Many premium cards do meet this bar when you actually use their credits. Travel credits, dining credits, lounge access, global entry fee reimbursement. These are real dollar value benefits. Add them up against the fee before you dismiss or accept a premium card. Step 3. Use credit cards as a cash flow tool, never as a borrowing tool. This is the single most important distinction between people who benefit from credit cards and people who are destroyed by them. The billionaire with the black card is not paying interest, ever. The card is paid in full every month without exception. The rewards, the perks, the concierge, all of it is received without paying a cent in interest because the card is treated as a payment method, not a financing mechanism.
If you carry a balance on a rewards credit card, you are almost certainly paying more in interest than you are earning in rewards. The math does not work. The card wins, you lose. Pay in full, every month, without exception. Step 4. Stack your benefits intentionally. Sophisticated credit card users do not rely on a single card. They have a primary card for everyday spending in their strongest category, a secondary card for the categories where the primary card underperforms, and they rotate strategically to maximize the return on every dollar they spend. This is not complicated. It requires 30 minutes of setup and 15 minutes a year of review. But the difference in annual rewards between someone who does this and someone who uses a random debit card for everything can be thousands of dollars per year. And over a decade invested in a broad market index fund, those annual differences compound into something meaningful. Step 5. Use sign-up bonuses as a tool, not a trap. Many premium credit cards offer sign-up bonuses worth hundreds of dollars in travel or cashback when you hit a spending threshold in the first few months. The strategic move is to time a new card application to coincide with a large planned expense, a home repair, a vacation you were going to take anyway, a large purchase you had already budgeted. You hit the threshold with spending you were going to do regardless. You earn the bonus, you pay the bill in full. That is hundreds of dollars extracted from the financial system for free. The Centurion cardholder does this on a much larger scale. The principle is exactly the same. Here's what I want you to take from this. The black card is fascinating. The Palladium card is fascinating. The idea that someone can pick up a phone and have a private jet arranged within the hour is genuinely mind-expanding. But the real insight is not about the card. The real insight is that wealthy people have a fundamentally different relationship with financial institutions than everyone else, and that relationship is built on leverage, the leverage of significant assets, significant spending, and the understanding that you can negotiate for better terms. You can participate in a version of that dynamic right now, at your current income with your current spending, by being intentional about which cards you hold, how you use them, and never letting the financial institution extract money from you through interest. The difference between someone who does this well and someone who does not is not access to the black card. It is the decision to treat every financial product as a negotiation and to make sure you are winning it. Drop a comment right now. Tell me what credit card you are currently using and whether you think it is actually working for you or against you. I read every single comment, and your answer might shape the next video on this channel. And if this changed the way you think about credit cards, about who they are actually designed to benefit and how to flip that dynamic, share this with someone who needs to hear it. See you next week.